The bears push price below support here on the SPY, but how low will she go? The QQQ manages to find support at the previous all-time high. And the VIX continues to make higher lows and remains in highly elevated territory. Welcome back, everybody, to High Quality Trades, the channel where I provide top-notch technical analysis on the stock market, where we go over simple support and resistance levels, trendline breaks, and pattern formations. And I give you the price targets of where price is headed in the coming days. So let's get into it. In today's video, we'll be going over the SPY, the QQQs, and the VIX. Also at the end of this video, we'll be going over Apple because I believe she's due for a bounce. So let's start this video off here on the SPY's 4-hour time frame. So today is January 12th, and the most recent close of the SPY was 580.49. It reached a high of 585.95 and a low of 578.55. She was negative 1.53% on the day. Alright guys, so what is the SPY currently doing? So it looks like on Friday, the bears managed to push price below this 585 support level. We headed all the way down towards 579.78. Looks like at this level, the bulls tried to step in and push price back up towards the 585 level, but were unsuccessful, and it looks like for now, this level is holding as resistance. As long as we remain below the 585 level, it's most likely the price will head down towards the next support level at 575. There is a gap out on the daily time frame that still does need to be filled back from the November election. So until this gap is fully filled, and let's highlight it, I would say the bulls still have control and can push price back up. But if the bears manage to fill this gap, it could be a bearish sign for the market. And we'll have to wait and see how price reacts after this level gets filled. So going back into the 4-hour time frame, some signals that show me that the early part of next week we may get a bounce. If we look here between the lows on price, we do have these two lows here, but if we go down here to our RSI, we will notice that the highs are not matching. We have a high, we pretty much have equal lows here, and then we have a low and a higher low here on the RSI, which is known as bullish divergence and can play out towards the upside. But we will have to wait and see if this green candle that we got on Friday, if that bounce was all we get from this divergence, then it's possible that if we fall towards this 575 level, that we could head down towards the lows on the RSI, which then would nullify the bullish divergence here, and then we'd have to wait for a possible bounce off the new lows that the RSI would be making. This is a new indicator I've got on the charts that a buddy of mine has made. It's called the Dynamic Flow Indicator. And it combines the RSI with a momentum indicator identified here by the purple clouds or purple waves. It also incorporates a VWAP with the red mountains here. So it is quite useful. There's a few indicators all in one, and that is why I have it on my charts. Now mine has been slightly modified. If you would like to get this indicator, you will have to modify it in the same way as me if you want it to look like this, or there is a standard version of this that looks more like this. And it also will explain to you what all the indicators it has on it mean. So the momentum, money flow, RSI, VWAP, the squeeze indicator, they're all like 5 in 1. It's very cool, and I'd recommend it to anybody that doesn't want to complicate their charts any more than they have to. So you could have all these in different panes open on one screen, but then it just takes up more of your screen. So that's what I don't like. This is all in one. Keep it simple. That's the best way to trade. Alrighty, so anyways, we have the divergences on the 4-hour time frame. Now let's go into the 15-minute time frame, and then let's look at our 200 period moving average just to get a better idea of where the stock market is headed going into Monday and Tuesday. So right now we are below the moving average. So this is slightly bearish, and price could continue lower. As long as we remain below this, the bears have control to push price lower. We did get quite extended from the moving average on Friday, so then price had to retrace and come back up towards it. Now come Monday, we still have that gap on the daily time frame that needs to be filled. So a likely scenario would be if it gaps down, fills that gap, and then the bulls step in and push price higher. But that is not the only scenario that is possible. If say we get a gap up towards the 585 level, and then the bulls cannot get above this and it acts as resistance, and also as this 200 period moving average moves lower, it'll act as resistance as well. This could be a point that the bears step in and then push price lower, and then we head down towards the gap fill on the daily time frame. But we'll have to wait and see which way price decides to go come Monday, and then trade accordingly. Alrighty, that's going to be it for the SPY. Let's now go on to the triple Qs. We'll start here on the 4-hour time frame. So it does look like the triple Qs is hitting a previous all-time high level that should now act as support. We did get a push off of this 503 level later in the day on Friday, and now we're waiting to see if the bulls are going to try to hold this level as support, and then we head back up towards the 516 level. Just like on SPY, there is a bullish divergence between price and the indicator on the RSI here. So actually on the triple Qs we have a low and a lower low here, but on the RSI we got a low and a higher low. So this is a slightly bullish signal that could push price back up towards the 516 level. Now to get a better idea of where the triple Qs may head the early part of next week, let's now look at our 200 period moving average here on the 15-minute time frame. So we did get quite extended from it on Friday, and then we pushed price back up towards it. As long as we remain below this level, it is still bearish and price can continue moving lower, but we'll have to see if this 503 level can hold as a hard support, or if possibly we break below it and try to trick and trap some people before the bulls step in and try to push price higher. Now usually we can't get too far extended from our 200 period moving average, so if price was to fall below it, the 503 level, it would only fall so far, I believe, before it bounced and maybe headed back up towards the 503 level. Being that this is a previous all-time high level, it should be quite a strong support for the buyers. So I'm expecting, or at least hopeful, that price can hold this level and then we'll head back up and try to retest the 516 level. So that's it here on the triple Qs. Let's now head on towards the VIX. So if you notice here, we do have higher low, higher low, higher low, and higher low. So being that the VIX is continuing to make higher lows and we are remaining around the $19 level, I would say that is elevated for the VIX and will cause some higher volatility than normal. Right now we're definitely between resistance and support. So if the VIX manages to get above the 4-hour candle close here that it managed to make on Friday, if we get above the 2032 level, I would expect price to head up towards 2311. But if we break below, say our purple candle here, 1853, it's possible we head and try to fill this gap that opened up Friday. It sits somewhere around this area right here. So the 1782 level is where that would fill. To get a better idea of where the VIX is most likely headed, let's now look at our 200 period moving average here on the 15-minute time frame. So currently we are above this moving average, which is bullish for the VIX to continue pushing higher. Now, if the VIX is able to get above the 2032 level come Monday, I will say that we would then be quite extended from our 200 period moving average. So then I would say price may retrace back. And the VIX will also, and this 200 period moving average will also start to slope up. And it may act as some support if it is hit for the VIX to then push higher. A bullish signal would be if price did manage to break below the 200 here. So if we got below this 200 period moving average and then it started to curl back over, that would be then bullish for the overall market, and then the VIX could head down towards this 1489 level. Alright, that's going to be it for the VIX. Now let's head on to what I consider to be a highly probable setup for Monday. So, Apple seems to be retesting this previous level of resistance back from this all-time high and the new all-time high, intraday all-time high managed to make here. So, this 237.15 level is a highly probable area to hold as support now for Apple. Now, some other signals to me that we may be getting a bounce come Monday, or say the early part of next week, is we have completed our rising broadening wedge that Apple broke out of here on January 2nd. So we did get a full measured move of this broadening wedge that completed right here at 238. Now price has fell below that towards that 237 support level, but it is doing so on a bullish divergence here on the RSI. So if you notice, we have a low and a higher low, while price made a low and a lower low. So it is a bullish signal for price to push up come the early part of next week. But I would say we first need to watch this low here around 240. If Apple's able to get above this, then it should head up towards 243. And if it's able to break that level, we have this trend line here. So if we start breaking this, it's possible. It is a pretty steep trend line, so I don't trust it very much. But it is possible that Apple would then head up towards 247.26. Alrighty guys, and with that will be the end of this video. Thank you for watching, and I'll see you guys in the next video.